Hi guys, I'm Nicola McKenzie, founder and mortgage advisor here at DM Mortgages. And today I am joined by a very special guest, Will Rice, who's the CEO of Generation Home. Now, Generation Home, for those of you that don't know, is an incredibly exciting new lender who are taking a very innovative and a much more modern approach to mortgages compared to traditional lenders. So if you are a first-time buyer, then this interview is one not to be missed. Stay tuned to find out more about how Generation Home might be able to help you onto the property ladder. So, Will, thank you so much for joining me. I'm honoured that you agreed to do this interview with me today.
Hi, Nicola. Thank you so much for inviting me.
Hello, no problem. So to start with then, Will, can you give our viewers a bit of an overview of the company and also what gave you the inspiration to start Generation Home?
Sure. So I founded Generation Home with my wife, Sophia, about 4 years ago. So we were in our 30s, recently turned 30, sitting in a new rental that we'd moved into with our friends and lamenting the fact that we, had worked over a decade, had good jobs, good incomes, but still couldn't afford to buy a house that would allow us to stay in the neighborhood that we grew up in.
Yeah.
So that took us down a route of exploring whether there were ways for us to buy a house with friends. We were looking at, can we pool our affordability, pool our buying power in order to get on the ladder? And the answer we ran into time and again was essentially no. We kept on running into lenders telling us, oh, we won't take more than 2 of your incomes, or similar obstacles, or we just don't take more than 2 applicants, full stop. Anyway, that took us down a rabbit hole that led to us deciding to launch our own mortgage lender with the view to solve the common affordability and deposit challenges that the vast majority of first-time buyers face these days when looking to get on the property ladder.
Okay, no, it's such an inspirational story about how you've started the business, because there will be a lot of viewers at home that are in a similar situation. They're trying to purchase a property, but they're perhaps not doing that in the most traditional of ways. And you're exactly right, Will. Lenders are not, or some lenders are not always the most accommodating if it's not a straightforward situation. So I think it's great that you're making things more accessible for people. So, okay, how then, if we're a bit more specific, how does the company Gen H differentiate itself from other mortgage lenders in the market in terms of the products available?
Sure. There are 2 really different ways in which we're differentiated, and I'll run through each of them quickly. The first one is in terms of our service, and the other is affordability. So on service, we just provide a far stronger customer service and support to our brokers and broker customers than other lenders do. So, for example, we're by far the fastest lender when it comes to getting you your offer, which means we can give you certainty sooner, and we can eliminate a lot of the stress and the waiting involved in finding out how much you can borrow and whether that mortgage offer is going to land. So, year to date, we've been converting applications, so mortgage brokers submitting applications to us. We're getting offers out in under 3 days. 2.5 days on average so far this year, which is much faster than everybody else in the market, who often or usually double digit. And the other leg where we're really different from other lenders is around affordability. We have 2 core products that really help our customers here. One of them is called our income booster proposition, and the other is our deposit booster. And I'll try and explain very simply how those can help you. Our deposit booster provides an alternative to families gifting money to help with the deposit. So the vast majority of first-time buyers these days are getting some kind of financial support from friends or family. But obviously lots of people don't have that benefit. And so we've tried to provide a product that would allow friends or family to actually co-invest into the property and have a fractional stake in it alongside you. So our deposit booster product does that. It ring fences, for example, mum and dad's contribution, so that they can subsequently get that capital back when you remortgage or you sell the house. But most importantly, it ensures that you as a first-time buyer keep all of your stamp duty benefits. So as a first-time buyer, you qualify for reduced rates of stamp duty, or if you're buying a house below a certain price, you don't pay any stamp duty tax at all. And so this product makes sure that you as a first-time buyer preserve all of those benefits, even though you have mum and dad coming in and co-investing alongside you into the property. So it's a really neat way to be able to say to your parents or other loved ones, if you were able to chip in and help me, you can actually get a fractional stake in my house. It can be an investment. If house prices go up, that investment is going to go up in value, and you can get that money back later, rather than just saying, please write me a check so that I can buy a house, right? So it's about helping start that conversation and give families who want to help but wouldn't otherwise be in a position to, the ability to go ahead and do so. So that's our deposit booster. The other thing that is live in the market already is our income booster product. Now, with this, you have the ability for mum or dad or other friends or family, sorry, I should say family, not friends, other family, to go on the mortgage with you to boost your affordability. It's a product that exists in the market called a joint borrower sole proprietor structure. So it's where you have somebody who's on the mortgage, but they're not actually an owner of the property. So for example, mum is supporting you with your affordability by going on the mortgage, but she's not on the title deeds, meaning she's not an owner of the home. Now, there's nothing unusual about that in itself. There are, as you know, Nicola, other lenders, for example, Skipton offers a good joint borrower sole proprietor product. What's really different about Gen H and our income booster product is two things. The first is, if mum is chipping in and helping with affordability, so she might be putting in £50 a month or £100 a month, and that's going to boost how much you can borrow with us. In exchange, she can receive shares in your property every month. So we've digitized the ownership of your property so that you can have a digital ledger in your app, so in your Generation Home app, that shows you every month mum's putting in X amount of money, and in exchange, she's getting a fractional stake in your home. So it doesn't have to be a gift from her. It can be, again, an investment. So it's all about providing incentives for families to lend a hand and make sure that we're looking after their financial interests as well as the home buyers.
Yes.
I think that's probably, in a nutshell, the ways in which we're most different or most strongly differentiated from other lenders in the market.
And as well, am I right in saying that you also allow up to 6 incomes to be taken into account with the affordability?
We do, and that's legacy of the fact that, as I said, the business started with me and my wife looking to buy with friends. So we looked into it, it makes no sense that we would restrict the number of borrowers who go on a mortgage to just 2. And we do have, it's not a big part of our business, but we do help lots of customers who are buying with friends. And the reason that people choose us to do that is that functionality that I just talked about, what we call dynamic ownership, the digitization of the ownership of your home, allows you to buy with a friend, for example, but keep your finances completely separate. So, maybe I'm buying with my mate and he's putting in 80% of the deposit and I'm only putting in 20%. So on day one, he'll own 80 and I'll own 20. But then perhaps I have a higher income, so I'm contributing more to the mortgage payments every month. And that's fairly reflected in our respective equity. So my stake is increasing over time. Every time I make a mortgage payment, I get more equity than my mate does. So when we then end up exiting the property, we decide to sell the house. We built up enough home equity to then go and purchase our own homes without teaming up. We know exactly what belongs to each of us. It's all documented and structured in a legal framework that's provided by Gen H with the mortgage. And throughout the life of that home, you've got our dashboard that you can log into and track how much home equity you're building, what belongs to each of you, and you can even trade in your respective shares in the property.
Yeah, which is a really, really key important thing, because I've seen people historically that have, gone through separation or other situations that when you're going into a joint ownership property, you don't always envisage that would be the outcome. But with something like this, it just makes it fair from the get-go. And I think
it really helps with couples as well, because the vast majority of people buy with a partner, and the majority of people buy with a partner before they're married. So there's no legal framework in place to say what belongs to whom. So Generation Home provides all of that legal framework for free. So things that would cost thousands of pounds to go and get a lawyer to draft up for you, we provide to our customers for free as part of the mortgage product.
Yeah, no, that's really good. Okay, so I would like to know then a little bit about just the market in general and your perspective on where do you think interest rates are heading in 2023? What do you see for the mortgage market in 2023, Will?
Sure. So I think to take things in logical order, what happens to the housing market, meaning where house prices go this year from now on, where house prices go will be driven by the amount of demand, the number of transactions happening, which in turn is going to be driven by interest rates, which in turn is going to be driven by inflation, right? So fundamentally, everything comes back to the outlook for the housing market really ties all the way back to what's inflation going to do. And as a result of that, where does the Bank of England go with the base rate? And then what do mortgage lenders do? I'm optimistic. I think it's actually quite easy to be optimistic at this point because the market got hit so hard at the end of last year that in certain respects, there was only one direction it could head afterwards, which was up. So after the mini budget, we saw mortgage application volumes decline by about 70%. A lot of this data is just beginning to filter through into published data, but from our conversations with other lenders and comparing notes with lenders and brokers around the kind of activity levels that everybody's been seeing, it looks as if purchase activity was down possibly as much as 80% briefly. And overall, towards the end of last year, the mortgage market had shrunk by about 50–60%. So it's really short, sharp shock to the system. Things are beginning to improve since the beginning of this year. So every single week this year, mortgage demand has been increasing on a week-on-week basis. So it hasn't snapped back. There's been no return to where we were in August last year, but the decline was very fast, and then we've been laddering our way back up. But volumes are still down about 40%, 40. So we're still a long way down from where we were before. But the reason that we're beginning to see this improvement, the reason that we were down 70%, but now we're only down 40%, is mortgage rates have been coming down. We saw rates spike up to a period where they were 6 to 6.5%. Now the most competitive rates in the market start at sort of 3.99% and go up towards high 4s or low 5s. So that's an enormous difference. I mean, that makes a world of difference for a lot of people in terms of what you can afford. But there is one thing that I'd call out that offsets this a little bit, and will continue to weigh for the coming months on the housing market. And that is where the Bank of England base rate goes, and the level that it's at. And that's because, and you'll know this very well, Nicola, the Bank of England base rate drives certain stress tests that lenders run when they process an application from a customer to decide how much to lend you. So I can give you some specific numbers actually here that are quite helpful. 6 months ago, when you were getting a mortgage from Halifax, they were making sure that you could afford that mortgage repayment if interest rates went to 6%. So maybe you had a 3% rate on your product, and they were testing that you could afford it if rates went to 6%. As of today, they're testing that you can still afford that product if rates go to 9%. Every time that rate goes up, obviously it's more and more expensive to pay, and so the amount that you can afford goes down. And it moves in lockstep with the Bank of England base rate. So until the Bank of England base rate starts to come down again, customers are going to be tested against this incredibly high interest rate to ensure that they can afford repayment. And that's just going to mean that you can afford less. So when you go and put in an offer on a property, or when you're viewing properties, the firepower that you've got is going to be lower.
So there will be a lot of first-time buyers that are watching this interview, Will. And the one question I get asked a lot is now a good time to buy a property? Now, what is your personal perspective on this?
Okay. I should very much emphasize that this is my personal perspective, and I often get things wrong. So take it with a pinch of salt. I'm putting my money where my mouth is because I've actually just exchanged on my first house. Okay. I'm lending to myself, which is exciting. So I'm finally able to be a Gen H customer. And my wife and I are buying a house. We're completing in 2 weeks' time.
Amazing.
So I think that now is a pretty good time to be buying as a first-time buyer, if you can. Now, obviously I say if you can because I've just talked about the fact that affordability is really tough at the moment. So it does fundamentally depend on, can you get a mortgage that helps you buy the kind of property that you want to live in? The reason I think that it's fundamentally a decent time to buy is that house prices have come down quite a bit already. House prices are down 5% since August levels. What you'll often see in the media is people quoting year-over-year numbers, meaning how our house prices changed versus 1 year before, but it disguises the fact that actually in the last 5 months, we've seen a real drop in house prices. So they're now about £20,000 cheaper. The average house price, sorry, has gone from, on the nationwide house price index, has declined from £282,000 to below £270,000 now. So meaningful savings. So that's the headline level. In my experience as a consumer, bargaining power has shifted massively towards buyers. There is limited demand. The amount of supply of property has been increasing, so more people putting their properties on the market, albeit from a low starting point. And it means that you can go in often with discounts to asking prices and secure a meaningful discount. The house that I've just exchanged on, I think we ended up getting a 7% discount to the initial asking price. So there are sort of deals to be had. And 6 months ago, 12 months ago, for the last several years, that's been impossible. You've been having to compete against so many people on the same property. You're bidding above the asking price, all those sorts of things. So
absolutely,
that's shifted in your favor. And then with my perspective that interest rates are going to continue to come down, you've got a bit of a sweet spot where you're now able to get a much more affordable mortgage than you were a few months ago, but house prices are around about 5% lower. So there's a point where those two factors are crossing over, and I think that for the coming couple of months, it's actually a pretty decent time to be going and putting in an offer on a property if you can find something you like that you can afford.
Okay, so talk to me then. You spoke briefly about this actually. So just expanding on collaborations that you have with other companies, partnerships, investment. Tell us a bit more about who you're backed by.
Sure. So our largest shareholder is Legal & General, which is obviously a FTSE 100 company, one of the biggest insurance companies in the world. But they also play an incredibly important role in the mortgage market. They operate something called the Legal & General Mortgage Club that provides support to about 1/3 of the total brokers in the market. So they function in this critical support role, bringing together mortgage brokers and lenders to collaborate with one another. And their investment into us, they've taken just under a 20% stake. It's the first time that they've ever backed a lender. So for us, it was a really significant deal having such a large business taking that, placing that vote of confidence in us, and being keen to work with us, collaborate with us to help change the market for the better. I
think it's very refreshing to see a lender embracing technology in the way that you guys are, and social media as well. Not all lenders are utilizing that in the same way. So it's very, very refreshing to see as a broker. Well,
Nicola, my team got me on TikTok 2 weeks ago.
I saw your TikTok. I saw it.
It broke sort of 10, 15 years of me abstaining from all social media. But I am now regularly trying to share my thoughts on what's happening in the market, really. Less about what we're doing at Generation Home. I mean, we might occasionally do something to provide an update on what we're up to, but the real goal is to give that lender perspective, because as you said, you don't get it. You don't get the head of Lloyd's Banking Group or Santander coming out and saying, this is my actual opinion about what's happening, and this is how we can help you.
Absolutely.
So we want to be able to do that for our customers and to be that opinionated, knowledgeable and helpful partner, to go, we don't have all the answers, but this at least is what we think from where we're sitting.
Thank you so much for joining me, Will. I think that our viewers will have found that interview incredibly useful and insightful. And if anybody is watching this interview and does want to know more about Generation Home, how you might be able to get onto the property ladder using their products, then make sure that you contact the team here at DM Mortgages and we can talk you through options. And we should be able to hopefully help you. Thank you all for watching.